If I told you that MicroStrategy's CEO Michael Saylor is bullish on Bitcoin, it probably wouldn't surprise you. Everyone knows that by this point already. But you might be surprised at some of the comments that Michael Saylor has said in the company's recent third quarter conference call, which was held on October 30th, 2024. I'm going to share with you those statements and my thoughts on the comments by the MicroStrategy CEO on the impact of cryptocurrency and Bitcoin on the business and why he believes that Bitcoin will be a much bigger asset class than where it is today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Michael Saylor saying that the embrace of Bitcoin by major political parties is a second huge milestone. I think we can see movement towards normalization of Bitcoin. And this has been true in recent political developments, the election of President-elect Donald Trump and the embrace of Bitcoin as a currency, as a valid option for financial markets transactions is a positive for the currency overall. Now, we are moving towards more normalization of Bitcoin. However, it remains to be seen if the momentum continues at this pace or if it slows down. The CEO saying that anybody that's been paying attention to the Bitcoin ETFs have noticed that they've been picking up over the past few weeks. And, this commentary was on October 30th, 2024. And at this point in time, Bitcoin was trading at roughly $60,000 each. Now it's closer to $100,000. So whatever the sentiments were during this statement is even more so nowadays. And I say nowadays as if so much time has gone by since October 30th until this recording, December 9th. But so much has happened that it feels like a lot of time has passed. The price of Bitcoin has increased substantially. And while the CEO was talking about Bitcoin, a $1.4 trillion asset class, this is closer to a $2 trillion asset class today. Bitcoin is gradually going to draw capital from equities, from real estate, from bonds, from currency derivatives, and of course, from gold. Now, that remains to be seen, but the more momentum that Bitcoin gains, the more total value of the asset class, the asset gains, the more it's going to attract investors that are coming from these various categories because they will see this as a risk to their purchasing power. And so they'll want to allocate a percentage of their wealth to this asset class. So imagine you're a wealthy family and you've got, let's say, $500 million in assets across stocks, bonds, real estate, etc. You're trying to protect your family's purchasing power over the next several generations, right? You've already attained financial independence. You've already got more money than you'll need. But what you're trying to do maybe is secure that wealth for several generations. And Bitcoin presents risks to your purchasing power. If the value of Bitcoin soars, 10x from here or 100x from here, that erodes your purchasing power. Your $500 million in those other asset categories, they're going to be worth less, relatively speaking, because the value of Bitcoin has increased. So the people that hold Bitcoin, they're going to be able to buy more things in the economy. They're going to be able to buy more physical things, to buy more services, to employ more people, to deploy more capital. And so you're going to be at a relative disadvantage. Your purchasing power of your 500 million has decreased. And so as Bitcoin's popularity increases, those folks are going to allocate a percentage of their capital to Bitcoin, even if they don't totally agree with Bitcoin, even if they don't believe in the story of all the reasons why you should be bullish on Bitcoin, even if they don't believe any of that stuff. They are still likely going to allocate a certain percentage of their portfolio to this asset class, whether it be 2% or 4% or 5% or 10%. That remains to be seen, but they're going to allocate just because of a risk reduction standpoint. they need to diversify. They need to have exposure to this asset class just in case, as an insurance, just in case it increases meaningfully and thereby risks its purchasing power. The CEO goes on to say that it's a network that everybody in the world needs, but nobody in the world can stop, and most conventional investors don't understand. Bitcoin is proving that is the strongest asset. Now, I don't know if I agree with that. Bitcoin is certainly increasing in price, and when you have something that's increasing in price, you can start to make the conclusion and say, look, it increased in price, so therefore we were right. And that's not always necessarily the conclusion that's correct to make. Sometimes you can make a poor decision that turns out to be effective. That doesn't mean the decision was a good decision. It just turned out to be effective because of certain circumstances worked in your favor. There's always a percentage of chance involved in these situations, especially coming from my experience. Before I became an investor and a professor, I was formerly a professional poker player. And many times I see this happen in the world of poker where you take, let's say, a pair of sevens against a pair of aces, whereby the aces are expected to win about 80% of the time, and the sevens are expected to win about 20% of the time. Sometimes the 20% comes through and the sevens beat the aces. That doesn't mean that it's the right thing to do to put your money, all your money in with a pair of sevens against a pair of aces, right? Even though sometimes you will win. And I saw so often people come to poor conclusions because of the impacts of chance. Chance favored them in one situation where it shouldn't have, where the odds were against them, but they won anyway. And then they made incorrect conclusions that, oh, that means I can do this again because it worked out. And so I'm going to do that again. And what usually happens is people not only lose that money that they won initially after getting lucky, but they lose more money that they put in afterward, believing that they can strike it again. They can strike it rich again, or they can get lucky again. And so I'm cautioning investors not to just make that conclusion, well, Bitcoin has gone up by so much in price. That means it should continue to go up in price because it's already gone up by that much in price. So I do agree with the statement that most conventional investors don't understand Bitcoin, but I also don't know if more investors understand it, if more investors will buy it. I don't know if that's going to be the case. And also don't know that everybody needs this network. I mean, our financial services industry is extremely robust. I don't know if you can improve on that. I mean, if you go into a store today, you can make a purchase without using any cash, using your phone, tap to pay, or you have a card and you pay and you're on your way in in a matter of seconds. And the merchant receives their money also in a matter of seconds. And so I don't know if you can improve on that. Sure, you can argue that Visa and MasterCard dominate the industry and they charge 3% for every transaction. And why should businesses have to pay 3% for those transactions? I can understand that argument. Still, I wouldn't say that everybody in the world needs this, but it's understandable that the CEO, Michael Saylor, of a company that's reliant so much on the success of Bitcoin, will discuss and say these kinds of things because that's the role, right? That's part of the understanding of putting so much of your money into an asset. Like especially if you're in a position like Michael Saylor is, you're in a position of influence. And so that after buying up a lot of Bitcoin, you can then influence the price higher by talking it up, by hyping it up, by creating this positive momentum, by your advocating for the asset. And that's what the CEO is doing. So not unlike any other CEO that hypes up their company Almost every CEO in the world does this about the company and about the products the company relies on. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.